Hi traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex review for the week starting off 8 till the 13th of July 2018. Happy summer officially, and I hope you have great plans for the summer, even for the part of it, to celebrate, to enjoy, to rest, to refresh your energies. And come prepared to the autumn, which should be a very volatile period of the year. Meanwhile, the volatility was very low on the previous week, which was of course because of the non-farm payrolls week and mainly due to the 4th of July. The US market was completely out of the trading this week. Might catch up. We have a very important fundamental week, and I'll go over that for as for now. But before that, let me thank you for the time you find to watch my video. I hope you enjoyed that. I hope you find it useful, and I hope my ideas are helpful for you, for your trading, and for your trading decisions. So thank you for that. If you enjoyed the video, please show your support back. Hit the like button. Drop some feedback below my face on the bottom on the comments. If you have any instruments that you would like me to cover, which I don't, let me know. I cover the most interesting ones as for now, as I see that. During the week things might go and change, and for those of you who are in Traders Academy Club, follow the live rooms. That's our whole thing. We trade the facts as they go during the week, so you are invited if you are not yet part, of course. For those of you who are, see you there. On Monday, I will publish the weekly PDF, so just come back to the video on below. In the comment sections, I will pin this comment so you can get the link to the download of the PDF, or just go to the description and I will post it right there for you. Or of course, just follow the newsletter, because on the newsletter I always send emails. You can sign up to the newsletter if you're still not during the blog, www.vladimirribakov.com. So let's begin. First of all, the fundamental view, as mentioned before. We have several very important things this week. First, it starts basically tonight with the speech from Kuroda in Japan. Tomorrow, Monday, President Draghi to speak. And then it's warming up with the GDP in Britain and manufacturing production, both expected to be good. Another speech continuation from Draghi on Wednesday, and then it's warming up with the cash rate in Canada, who is expected to increase the rates, go for a hike. That's according to the expectation. That's why previous week we saw the CAD basically getting some momentum, and this decision would definitely have a weight on the continuation of its move. Then the ECB monetary policy meetings on Thursday, the CPI and the core CPI in US. Pay key attention to that for the reason of the further hikes. If the numbers come high, that could be effective on the Fed and help the Fed with their plan to go for more hikes. The news from the job market on last Friday, the non-farm payrolls, might kind of make the Fed hesitate, and the CPI, core CPI, will definitely be an important numbers. So, technically speaking, pound dollar was a bullish run for our plan from the previous week. Now this is basically gaining some kind of confirmation with the attempt to break, not a good draw here. Let me just go for the MT4 line. This is the high that we would like to see broken. This high belongs to the daily chart. We got a false break here and a false break here, which not valid according to the divergences, but both lows false break this low. So one attempt and second attempt. Now we do want to see these higher highs gaining the momentum by making it, and if it managed to do so, the pound dollar will basically be planned to remain bullish as long as it stays above the invalidation area. So any kind of drop to the next important supportive areas or to the trend lines that will be drawn, right? We have a trend line drawing right here. So back to the trend line or back to another bigger deep supportive area right here, and we should be looking for sell for buy evidences of the pound dollar. So from my point of view, as long as we are above the invalidation, pound dollar is a buy and a buy continuation. The way I see that, the pound dollar should do something like that, and then one more low likely to happen, or at least it should try and move in something like that. And that's why buy dips should be smart idea as long as we are above the invalidation area. Break below the invalidation invalidates the buy plan. And it doesn't mean just drop a buy area, just, oh, okay, I have a level, Vladimir said buy, let's buy. That's not the whole thing in trading, of course. Look for the buy setups to form with the strategy use. That could be a bounce from Fibonacci levels, trend lines, supportive areas, false breaks, higher highs, tunnels, moving average to cross, the bullish divergence, any kind of formation you normally work with. Look for that to happen after we got two signs. One, the break here, two, pull back and hold. The hold normally comes with bullish signs, bullish reversals. I rely on bullish divergences and false breaks. That's what normally gives us the continuation. Of course, if we get some kind of a trend line breakout, that would work as well. That's for the pound dollar. The next one on the list is the euro dollar, and this pair also was a bullish plan for us from previous week, buy drops, and it remains the plan for one reason. Basically here we got the special cycle from the daily chart, and that's why we expect a pullback. The pullback could be in two variations. Variation number one, two waves. Variation number two, range. Whatever it is, buy drops was and remains the plan. So that's how I see that. The euro dollar, this is our invalidation. Many things could change with Draghi's speeches this week, and of course the CPI to come out in the US later. But we have several levels to pay attention to. 161.8 of this cycle, which suggests the area of 118, closer to 119, and we have the 161.8 area of this, which also suggests pretty much the same. And that's why from my point of view, the euro dollar, as long as it holds the invalidation, which is the previous low, should continue further. So buy drops is a very good things to do with the euro dollar. And of course, all those of you who are in buys from the previous week, as per the previous week plan, it was and remains the plan. Just remember, we don't expect anything long term here, so cash out with short term risk rewards is a great plan to do. So if you are day trading that, for example, the bounces, keep the risk reward in your favor. These little bounces during the week provide the buy opportunities and provide to enjoy that. That's where you get the risk reward, because it's not a long term. You can't get like, oh, okay, I'm going to risk 200 pips, let's get 600, because that's not the levels we expect to do, right? The levels are smaller, so the time frame to trade is also smaller, and the risk reward is different than for the long term. So the risk management should be different. The next pair on the list is the this one actually doesn't have anything interesting. Dollar versus Canadian is a pair that definitely is on the list. For one reason, we have the cash rate this week. So what do we have on the dollar CAD? We have the channel, which is still going on. And as per the channel, we should be looking to sell the rallies. And that's the main plan for the dollar CAD, as my point of view. As long as this invalidation holds, I would be looking to go for short. So sell the rallies back to these zones with bearish evidences like bearish divergence, trendline breakouts to the downside, false break on the top after the rallies, right? And that should be the plan for the dollar CAD. The next pair on the list is the Kiwi CAD, which is one of my favorites personally. According to the long-term decision, we are for sales. According to the short-term terms, we are without any bullish stoppage. Now, this is a bullish hidden divergence, correct? But since this is a bearish trend from higher time frame, the bullish hidden divergence doesn't help us with anything but a retrace. So for the Kiwi CAD, I would be looking greatly for these areas. Whatever it provides here, I'll be looking there for sell setups with the rallies to happen. Should work well for this pair, but again, don't attack a level just because it looks promising or the higher time frames look promising or anything like that. Simply wait for facts. Facts are the bearish retrace. Sorry. So when you get yourself the bearish signs after rallies, that's your time to go and look for the trades. Next one on the list is going to be the OZ versus the dollar. Definitely interesting opportunity from my point of view, and here is why. We don't have anything clean or clear on the weekly chart. However, we do have here the double cycle, the mini double cycle, which takes us close to 61.8. We have the area right here with some bullish divergence. So there is some kind of a pressure from the weekly chart. On a daily chart, this is a formation by itself that could split into special cycle, that could split into triple descending cycle, that could split into the double cycle, you name it. That's the special conditions for this pair currently. The bullish divergence is in play with the moving averages, therefore we have bullish conditions. This is invalidation area. On the 4-hour chart, we basically saw the Aussie dollar making two false breaks, 1, 2, with beautiful divergence formed here, and the principle of higher highs, which means a convergence. Now, it's not a full convergence simply because the MACD does not create higher highs as well, but it is higher highs on the chart. That's what brings us to the conclusion that a correction might go and begin. So as long as this is the invalidation area and it holds, basically from my point of view, that's buy retraces. Now, since this is a special cycle here on the 4-hour chart, that would lead us for 2 waves correction or a ranging correction. Whatever the case is, drops and buys is still the plan as long as we are above the invalidation area. That brings me to the next one, and this is the where is my chart? Here, Pound Aussie, a pair that we also started to follow on the previous week, still stuck in a range, and this is where we do want to pay attention into the situation. A break below should lead us for further continuation down. Why? Because of the weekly cycle. We would expect a second leg, right? This, or you can break it different ways, but we would expect a second leg to form. Now, the thing here is with this range is that might turn to be a second cycle. So first triple range, this was a triple, right? 1, 2, 3. Then a range, and then a continuation to these areas of the 181, 182, and from there with the next divergence to form, looking for a sell. So we have two conditions for the pound Aussie. One, after the break of the range, sell rallies. Second, creating the new high, making the second cycle to be the 61.8 of this, which means this area, closer to a 181, 182, and from there looking for the sell setups. But looking for sells on this pair sounds like the correct thing to do, at least as for now. The next one on the list, where did I put it in the file? Oh, here we go. Aussie Kiwi, from my point of view, for the long term, that's buys. We got one way pullback here, so I would prefer that to get the little rally, one more drop, some bullish divergence to form here, and go long on the Aussie versus the Kiwi. Another one that is very interesting from my point of view. And that's basically all. That's the main interesting pair as I see them. There are many ones that are developing setups, but they are not there yet, especially after previous week without the volumes and the 4th of July. So that's the main one I find interesting to start and focus during the week. As I said before in the beginning, there will be more. Charts are updated, of course, cycles are developing, and I will keep publishing that in the live trading rooms on a daily basis. So if you would like to trade these cycles as they develop with me, you are invited. If not, on the next weekend we will cover the new cycles as they develop. As per commodities, gold finally reached the 1240. We have been expecting making the first pullback to the upside. This is a bullish convergence, and as long as it holds above the invalidation area, I would expect gold to continue higher. Break below the invalidation could change the whole picture here. As for now, for me, it is for the buys. Oil is a bit tricky here. We got one fake breakout on the top, so I wouldn't really be. What is that? Where does that come from? And I would not be surprised if the oil basically gives us one more high here, closer to the area of 80 or something like that. One false break without real signs to the reversals doesn't look too promising. So the way I would be looking to trade that is if it does anything like that, from my point of view, it is still for the buys. So buy drops. The only thing that from my point of view could invalidate it is if the 4-hour chart would create triple cycle. So 1, 2, 3, then 2 waves retrace and breakout. That invalidates completely the buy plan and turning that again into the bearish view. As for now, it did not form, it did not happen. That's why drops is still, from my point of view, a buy opportunity. Indices, the German DAX is a very interesting one from my point of view, the way it is forming itself. That's what we got currently. We would like to see the daily chart completing here some kind of a bearish sign with bearish hidden divergence and the turnaround. From there, looking for the sells. The best way to do so, it would be if to get the daily chart making divergence, 4-hour chart forming a confirmation, and from there going and look for the sells. NASDAQ, where is NASDAQ? Here. Also, as long as this is the invalidation area from my point of view, so we are forming here 2 waves. Now we do want to see the breakout, right? If we make the breakout, that's a sell plan for the NASDAQ. If we break above the invalidation, which is this top, game is over for the sell plan, and we will have to wait and see how it is behaving. with the weekly false break, and if it managed to hold it at all. So that's why we have to be very specific, and specific in that case means the break of the trend line. Happened, we got to go. Did not happen, don't rush. And as per cryptos, we have here the Bitcoin breaking the trend line, still having a hard time creating the higher highs. If it managed to do so, that should be a very good sign. However, I am already pretty positive about the current development. As long as this invalidation area holds, my expectations from the Bitcoin are to the upside. Ethereum as well, I would be after the buys here, after the break of the trend line. The only thing is missing is the break above, sorry, not invalidation. This is the break point. We want to see the break above this area to get the bullish momentum with us and look for the buys. Invalidation for this plan is here. So the breakout happened. We don't have any real hold yet, and that's why rushing into that, it doesn't make any sense. Watch that to gain a momentum does a lot of sense. So that's all for this week, my friends. There will be much more, of course, as said, but as the week ended slow, it affects, of course, the slow beginning for the current week, and that's basically all we have. So thank you very much for watching this video. I wish you a wonderful trading week, and I hope to see you with us in the Traders Academy Club, in the live trading rooms. You are invited. I wish you a wonderful week once again. If you enjoyed the video, feel free to share with anyone you believe who can have a benefit by watching this video. Feel free to share. It's open for the community, and your feedback below will be very, very much appreciated and welcome. Thank you once again for your time. I'll see you soon. Yours, Vladimir Ribakov, Traders Academy Club.